Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to take a look at the topic of losses, which is an important topic. So we'll take a look at that in today's video. But first we have to look at our risk disclaimer and remind you that all examples of these videos should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. That's what today's video is about. And remind you that all professional traders must know and accept, but more importantly, understand that losses can and will and do unfold. Right, let's have a look at a 3-minute chart of the NQ using a 24/7 chart here. For those of you who are new to MTPredictor, you remember that we're not a black box system. We don't take all our trade setups blindly. We don't do this because we know and understand that markets are random about half the time, therefore we only look to trade when the picture is clear. And for that we go to the higher time frame. The higher time frame is a time frame between 3 and 5 time frames higher. So for a 3-minute chart it would be approximately a 15-minute chart, a daily it would be a weekly, so if you're trading hourly Forex it would be a 4-hourly chart. Just going to use our trading mode and go back to before that high unfolded. And what we do is we place our decision points on the higher time frame chart, and as you can see they're on the chart in advance. In other words, they're leading indicators. What we look to see then is to see whether the market goes to that level and see whether it makes a reversal at that level. In other words, is the market doing what we anticipate? Let's turn trading mode off and you can see this is what happened on the 15-minute NQ. It went up into this level. In fact, it had 2 attempts at the high and then started to come down. Remember, we're not looking at our MTP trend or anything like that on the higher time frame, we're just placing our DPs on that level. If we now come down to our 3-minute chart, let's see what it looked like. Can you see there's the reversal at your higher time frame resistance? You see that? There's the 15-minute DP. The market started to back off from that, therefore we deem the pictures becoming clear, and as such we can start to look for short trades. The MTP trend turned red to confirm that as well. Can you see we did have a short trade here, so if I use training mode we jump back to this. At the time that looked to be a very good trade setup, didn't it? Coming off higher time frame resistance, started to go down, made a lovely ABC correction, our MTP trend is red, we placed the analysis on. The potential target was almost 15 times the initial risk, 14.5 times the initial risk, so this looked to be a very good trade at the time, and you would have been taken in, and the market did start to go with you like this quite nicely, but then suddenly it started to come back up and you can see it's already stopped you out. So it would have stopped you out there. If not, if you hadn't been filled there, you would have been here. But the point being is, and the reason for this video is that this would have been a losing trade. So what's so important about losses? Well, losses will happen no matter what trading approach you take. So what we do at MTPredictor is we use a technique called position sizing, which is what we have here. So we vary the number of lots, contracts or shares to keep your initial risk small and under control. In other words, a set percentage of your trading account. In this case, for futures, we're risking 2% of a, well here this is a $10,000 account, but our default account is $20,000, or if we say trading a small account, can you see how the number of contracts changes depending on your account size, but it's still the same initial 2% risk on whatever account size you have. So when the losses come through, they come through as what we call -1R, or 1 risk unit. So why is this so important? Well, you've made a loss, the loss would have been 1 risk unit. And the idea being is when you have profitable trades, the profits are large, but not just large in dollars, but in relation to those losses. So if I actually look at a 5-minute chart, this time here as well, whoops, I'll take my analysis off that I was looking at earlier. Can you see again we had the same setup. There is your higher time frame resistance, the market came down, it then made a correction up. That was our 3-minute sell. There was actually also a 5-minute sell here that, guess what, would have actually been a losing trade as well. So that would have again been a -1R loss. But what happened after that? Well, after that, again, if I use training mode and I jump back to this sell setup here, again this looked to be a good setup. Can you see how it came off the 15-minute DP resistance, initial decline down, a lovely ABC correction up, our MTP trend was red, this looked to be a great trade setup. So you'd already had 2 losing trades at this stage, but this time The position sizing again gave the number of lots, contracts or shares, in this case going short 4 contracts for 2% on a sample $20,000 account. But let's see what happened now. If I turn trading mode off now, can you see how the market did indeed this time go down to our initial target, which would have been our typical wave 3 WPT. In this case, the profit would have been, so I call it 6.5 R. But can you see how it's important that we look at the profits in risk units in relation to the initial losses, because here the profit was 6.5 times greater than your 2 previous losses. So even though you had 2 previous losses, the profit would have been large and more than made up for those previous losing trades. So that's what we're looking to do with MTPredictor, is not avoid the losing trades, but keep them small in relation to the losses. If you're now perhaps looking to run this a bit further, the current profit is about 9R, or if you'd come out at the maximum wave 3 WPT, approximately 12R, which would have been a massive profit. But the point being is, even back up at here at 6.5R, this profit would have been much larger than the previous losses. Or put the other way, the previous losses would have been kept small in relation to the profits. So that's what we're trying to do at MTPredictor, is that no matter how good your trade setup can look at the time, I mean this one here, as we saw, looked to be very good indeed, looked to be an absolutely perfect trade setup, losses can and will and do unfold. It's important to know and understand, but it's very important to actually accept that this will happen when trading. Losses will always unfold. It's important that software vendors like ourselves actually talk about losses. It annoys me when other software vendors never seem to talk about losses. They just sweep them under the carpet and gloss over them as if they never happen. And then suddenly you start trading and with their system, and losses come through and you don't know what to do with it. That's why we want to talk about these up front and just remind you that no matter what happens, there always will be losing trades. And that's why we use position sizing, and it's how we cope with that in MTPredictor, in that the losses will come through, but the trick is keeping those losses small by the use of position sizing, then having the losses small, but when the profits come through, have the profits large, but not just in dollars, in relation to the initial risks. So hopefully this has been a good video just to remind you and talk about losing trades and how we cope with them in MTPredictor.